Hello traders, wonderful weekend to all. Vladimir Ribakov here, and this is the weekly forecast and market review for the week starting on 19th of February 2017 till 25th. So, last week was very interesting actually, and as we expected, the action happened on the second part of the week after Wednesday. We got some moves, we got some profits, we got some opportunities, and now it's time to get ready for the next opportunities building up. But first of all, quick fundamental view what is expected to us this week. And let's start with Monday. Monday, it's bank holiday, President's Day in the antivirus again. President's Day in the US. Low volatility is expected all the way until midnight. Then we have the monetary policy meetings in Australia. Then we have quiet week going on until Wednesday and FOMC meetings. Last week we have the Fed testify in front of the Senate. This way the meetings minutes and they will publish their statements. It's going to be very interesting, and that's why I believe this week will be kind of a copy of the next week, of the previous week, as it was on a quiet beginning, and then on the second part of the week, action happened. So that's basically what I would expect again. So that's on the fundamental view. Now let's quickly go over the week and see what do we have. Let's start with the Euro Aussie, which is dancing around the bottom of the range, completing here movement down, building up some divergence, but it's irrelevant inside the range anyway. And the most important thing basically here, dates. We had 1923, right? That's very powerful period coming for us, so the bottom is very close. Now we had already here a beautiful bottom, the double cycle of this. We had a spike above below this trend line and beautiful engulfing, triple candle engulfing. This is a beautiful bullish divergence. So basically, pair is building up its bottom. Now, the question is, could it go and spike further lower before the retrace up happening? The answer is yes, easily. But considering everything, we have great levels already, which means we could start looking for the buys. Now, how is the best to look for buys here? The best thing, first of all, one of the options is just to invest. Invest means jump in and hold your position even if it goes against you. And by that, we actually plan to attack levels. So we have this level and we have a bit lower level, which we would be attacking again next to this supportive range, right? So if the fly happens from here, great. If it happens from here, even better, because we can also add a bit more of the exposure and enjoy the cycle to build up once it is ready. But the disadvantage of the investment is you cannot do that on small accounts. You cannot leverage. That's a recipe for a failure. You use always less than you have. So if, for example, you have 10K, you trade 0.02, 0.03. The lower, the better, the safer. So from one side, yeah, the reward are low accordingly, but the risk is also very well controlled. And this is the most important thing to do. Especially it's good only mainly for buys. For sales, it's a bit more dangerous. This is the biggest advantage. Sorry, that's basically the disadvantages you have. But the advantage is you quietly hold your position. And the beautiful thing is that you don't care about the noises. But as I said, it's not for everyone, not for small accounts for sure, only for big, only for those who know they have all the patience in the world, which means it can take a long time. And those who don't, what they do in this situation, for our chart, we had a double cycle here as well, and here as well. And we got this trend line broken and a bullish divergence. And now we have higher highs, creating convergence principle. On the 1 hour chart, we had here kind of a special cycle. Boom, 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 voila. Divergence, so this is one of the options, and I would expect continuation. And another option is that we are currently moving in kind of a range here and here. So we might start moving in something like that, and then with the breakout for continuation. All what I said is relevant as long as this bottom holds, because if it would not hold, there is a very good chance we are going for 136 and maybe even 132 before the fly will take place. Keep an eye. We have great levels. We also have the intraday opportunities around these levels, as you can see. 4-hour chart is already great support. 1-hour chart also inside the tunnel, so there is a very good chance we are going to start the attack for the upside. As a mirror, we have Aussie Frank making a move down. Beautifully reacted exactly as we expected. And we can summarize that by saying, as long as the top holds, we are in the sell zone. So what are the options? You can see this is kind of a mirror to the Euro Aussie. That's one of the options. That is another option. Okay, if it just keep rallying, let it go. We will be looking for the next levels, and the next levels will be on the next cycle and the next divergence, and that could be around the 079 up to 080. That's definitely possible levels for further resistances. But as long as the top already holds, there is a very good chance we would face this rally and continuation. Okay, so keep an eye here. This is the last double cycle, which means we are aiming the 38.2 correction of it, so you can get a very nice risk reward here. Keep an eye and try to trade it on the intraday. Looking in terms of the statistics, we also had a monster top here that was created on a 14 and 15. We have 14 and 15, both very, very powerful days for tops, and that's why we actually in a down move. Keep going. Aussie Kiwi so far doing exactly what we expected and wanted. And the only question is now, what's next? We are after only buys for long term. We know that. There is a good chance that we will move in kind of range here before it flies all the way up, as we had two false break, one and another. And there is a very good chance that we will correct now this cycle. We had a special cycle here. 1 correction, 2, 3, 4, 5, and then we have 2 waves down back to this area, and from here next to the trend line we are going to fly to the upside. So 104 below 106, if it drops lower below this range, we are going to look for the buys. We need 2 waves, bullish divergence, very, very important, like that and like that, bullish divergence, and then only then we are going to look for buys. And if this range holds, then every time it bounces from the bottom, we are after buys as well. Further expectation for target would be, of course, duplication of this candle, of this cycle first of all, right, which means we have it approximately around 108.50 or so, or the top around 112, 113, which is the weekly range here. Okay, so keep an eye on this one as well. Looks good, behaves good. We are looking for buys. Continuing moving, Euro Kiwi. Last week we've been talking about this pair. I still would want to see this level broken first, and it wasn't as for now, which means there is a chance we're going to see that dropping a bit further before it flies, or it's just building a head and shoulders pattern for us, like here, head and another shoulder. This shoulder was broken into another pattern by itself, so might be this. So there is a very good chance we are still holding for buys. This is a trend line we might go and hold. And on the 1 hour chart, we got double cycle up. So if we got a double cycle down as well, or in other words, something like that, we can be looking for the buys here, expecting it to break the resistance from the daily chart and continue further. All that is relevant as long as the last bottom holds, because if it will be broken, there is a very good chance we are aiming the 140, the very psychological level, or maybe even a bit further down. So keep an eye here, In terms of the daily statistics and levels, we have monster levels expecting us on the way. That's why I say we could expect some good buy opportunities. For Euro Kiwi, on the bottoms we have 19, 23, 18, all that. Very powerful period. There's a great chance we're going to hold that as well for the buys. Gold, 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 gold. Bearish hidden divergence and a trend line. By ideal, gold might reach 1260, 1270 before the sell. But, and here comes the but, we had this double cycle to the upside. Yups. Here we go. 61.8. Divergence. Bouncing there. And not just this cycle, but this cycle as well. Giving us hard time around the 61.8. This is a very powerful zone. Right? Which might be one of the two options. Or top is created here and we are dropping down for 2 waves correction. Or we are moving into the range now, which is here. We are going to move in something like that and then cover the 1260, 1270. As for now, as long as the top holds, we might be trying for sells. On the intraday, we had triple cycle option here. Boom, boom, boom. Ugly, I agree, very ugly, but still 3 waves. Now, it's building down the convergence idea. If we manage to get this in the beginning of the week versus this top, we might be looking for 2 waves up, break, and attempt to go for sell. At least to the bottom of the range, and if it keeps developing, then for 2 waves correction, or in other words, double cycle correction, which is here, 38.2, which means we can go to 1200 or even less. Keep an eye and stay tuned. That might give great opportunities. So do the silver, which is building up this beautiful duplication. Dancing around the 100. Bearish hidden divergence. Beautiful trend line expecting from the top. As long as this level holds, we are after a short 38.2 of this cycle. If we break above, we are going towards 1950, and then we are going to attack the sells from there. Keep an eye. Another amazing opportunity building up. Next on the list, pound dollar. So far, dancing around the range. Now, it's holding this trend line. If we will manage to break above, we could be looking for the buy opportunities. We're still in the bottom of the range, which means we can also go and try to play it more aggressive. So if we bounce from here, again, with some kind of false break, and rallying, 2 waves down after that, and we can try to buy the bottoms. If we keep going through, there is a good chance we are going to break below the range and continue all the way to the bottom of the daily range, which is again around the 120. Doubtful that will happen, but it could. And that's why it's very important to mention careful. And here is why I'm doubtful, because this was a triple cycle up, which is now correcting by potentially double cycle down. There is a trend line expecting from the bottom, so we could easily see that bouncing and bouncing hard. So for me, pound dollar remains only under buys. That's the levels. That's the trend line. It could go for the combination around 123 or so, bottom of the range or so, and fly. So keep an eye and look for these buy opportunities. Talking about the bottoms, pound dollar has a very monster day coming. 18, 17, 23, 24. Very bullish period expected on this week if we will get the buy setups we are looking for. Keep an eye. It could be really, really good one. Dollar yen. Well. No clue what this pair does. Besides the two options we've been talking about, the range, we are still in this range. We can look to buy the bottoms, or we are going to duplicate the 2 waves and bounce from the trend line. The 2 waves that will block us probably around the here 61A, that would be the holding the range, or duplication, then it will be around 109 and the trend line, and then we can fly. So every drop lower we go, look for buys, as long as this trend line will actually hold. Let's draw it more carefully. This is 1, this is 2 if we ignore the spike. Okay, that would be our holding zone where we expect to buy from. And that brings me to all the yens. Every drop down in 2 waves. CAD yen could be in the bottom of the range or 2 waves down. Euro yen is doing pretty much the same. We have the trend lines. We want the 2 waves to duplicate themselves and looking for the buys. My view did not change. I go over that shortly because we've been talking about it on the weekly forecast, on the previous weekly forecast several times. One we really looked forward was the Kiwi yen, and this one is pain big time. That was the move down. We said 2 waves up, look for shorts. Here we go. So those of you who are holding the shorts, keep that going. You can partially cash out, assuming that might be the bottom of the range and continuing further. So partial cash out, and those of you who still hold, just let it go for the, this was kind of the triple cycle here, right? For the 38.2 or even 50. If that's about to continue, you're going to get amazing risk reward and profits here. So hold that going. Next one would be on the list. That's actually the euro pound. Where is my euro pound? Here we go. Euro pound, which is bouncing from the bottom. I expected 0.84, to be honest. We still might get there. This is would be the bottom of the neckline, 0.84, 0.83 zone. But to make it very simple, every 2 waves up, we'll be looking to go for sell. And here we go. We might hold this range. Or in other words, if we are holding this range and we get closer to there, that could be like inner special cycle, which means we might be dealing with the sells to come further on. So look to short every cycle up that ending around the range zone or completing 2 wave cycles. Look for shorts here, which means pound franc, look for longs every 2 waves down, which means it could complete these 2 waves down, or it could hold the range, and then we're looking for the buys on the bottom of the range. Statistically, we have all the reasons to look for that. We have again 22, 24 very powerful bullish period coming. Look for that. And in terms of support, we have a monster here as well, around 123 on a daily chart, around 122 also on the 4-hour chart. This is a monster zone for us. So what we will need there basically is very simple. We will need to get false breaks, right? We will need to get something like that, false break. Momentum will change for highs, 2 ways correction, and we will be looking for the buys. Okay, switch around. We don't. It's very important to say now, guys. Do not attack blind levels. This is a very common mistake, assuming that will be good. The levels are so good. Vlad said, no, guys, we don't attack blindly levels. Remember that it's going to save a lot of your money. That's a very common mistake to do, and this is exactly what you need to avoid. That's the difference between professional and not professional. And you just decide on which part you want to be, where you want to belong to. Okay? Because passions and timing. If there is no setup around the levels we want, so what do we care about the level? Right? You understand what I'm saying, guys? And this is very important to remember. Level means nothing. Level means a place to look for a setup. That's all. Level does not mean a zone to attack. No. That could be good for investments on a weekly chart, not for intraday trading or short-term trading, not at all. And that's why I say that. Don't fall in these traps, don't fall in these mistakes. You don't want to regret on that. Indices, Dow Jones. Well, where to start from? Monthly chart, Monster 161.8. You know what it means. Bulls are getting expiring. They will start to expire their positions, which means for us, we start to look for sells. How? Well, by ideal, false breaks, lower lows, retrace, and sell. Not by ideal. We are looking for step trading because we are on the levels we want. We need false step trading, which means boom, 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 boom. 1, 2, 3, 4. Another alternative with step trading is 1, 2, 3, and 4, like that, with a false break, and then break below here, we enter the sell. Because we are dealing here against a monster bullish trend, we have to play careful, which means wait for the setups to form and take minimal risk. And the reason for that is if we attack the daily cycle, the risk reward we can get here down to 38.2 is a monster, which means it's very easy to take very small risk, like 0.25%, and expect to get paid like 10 times bigger if the move is about to happen. That's the beauty of that. Okay, that's the power of the risk reward. Think about that, you'll understand exactly what I'm saying. The oil is holding the range, so I would not try to be a hero and make any calls. We will follow that on a daily forecast, and I will keep you updated, guys, about that development. Currently, I have nothing. So that will be all for today and for this week. Many great opportunities and levels to watch, but, and here I say that once again, guys, that would be a terrible mistake to do, to attack a level blindly. We want to trade setups, not levels. Remember that. Okay, it's very important. Okay, remember that. Like, it's like a stop sign when you drive your car. Stop sign. Stop sign means stop and look around. If you have a good setup and no cars around you, then you can continue. If you come to the stop and don't stop, you just keep going, attacking your direction, you're gonna risk yourself to get damaged. Same on trading. Same exactly. You drive your car here, which is your account. You come to the stop. It's actually stop all way, right? You're looking left, right, forward, making sure it's all good and safe. And then this is your setup. Then you are attacking. Timing and patience. That's all about it. Has a huge difference between real success and failures. Remember that, my dear friend. Thank you very much for your time watching this video. I wish you a wonderful, fantastic trading week. If you have any question, leave your question in the comments. I will be glad to have your feedback. If you like the video, write your feedback. I will, of course, reply once I am free a bit. And thank you in advance for that, of course. Feel free to share this video with anyone who you believe can have advantage by watching that and make some money. This is our idea: spread the word, and help other people become successful. If we manage to do that, we are the most luckiest people in the world because we help someone else. Thank you for your time, and I wish you all the best. Yours, for your success, Vladimir Ribakov.